September 5th, 2023, right here in Lagos, Nigeria. Good morning, good evening. Wherever the world you're watching from is Business Morning live from Channels HQ. Great to have you share your morning with us. Let's kick off with the markets now. Let's see what's happening with oil prices mix today. Brent crude futures for November, that fell about 26 cents, 0.29%. Kind of like to see when oil prices fall at this point. It's trading at $88.74 a barrel. U.S. WTI crude for October futures, meanwhile, that rose 21 cents. So we're seeing mixed picture there. We'll drill down later on what's driving sentiment in the oil market. Let's take a look at edible oil now. We see Malaysian palm oil futures opened lower today. So we're seeing another decline there. Declining for a second straight session as weakness in Dalian and Chicago Board of Trade. CBOT rival oils weighed on the market. The benchmark palm oil contract, FCPOC3 for November delivery on the Bursa Malaysia Derivatives Exchange, that fell about 52 ringgit. 1.28% to $845 per metric ton in the early trade. Let's take a look at the grains market now. All eyes on that Black Sea grain deal. We see Chicago wheat futures that rose today, regaining some of last week's lost ground with expectations of lower output in key exporting countries. The corn CV1 that gained 0.5% to $4.84 a bushel, and soybeans SV1 rose 0.2% to $13.71 for a quarter of a bushel. And now to that groundbreaking event that happened yesterday. Well, history has been made in Lagos and indeed Nigeria as a whole as the first metro rail transport began commercial operation in the state. Yesterday, the first phase of the rail line extends from the Marina area of the state to Mile 2 with 5 stations located in Marina, National Theatre, Igomu, Alaba, and Orile on the corridor towards the border with Benin Republic. Our correspondent Dare Ido joined the ride.
The iconic Marina station is the takeoff point. Invited guests and others who have indicated interest in joining the governor on this maiden commercial ride are here. The governor arrives at the terminal of the Blue Line, runs through the ground rules for passengers who will be using the service. The Cowrie card, an automated fare collection system already in use in Lagos, is every passenger's access to the train. And a trip from Marina to Mile 2 costs less than 500 naira because the fare is subsidized. The inaugural ride is scheduled for 9 a.m. The governor gets on board and the train is en route to Mile 2 on schedule. It's a packed train on this inaugural ride with the governor on board. This metro line is expected to convey 250,000 Lagosians on a daily basis, and that's the first phase of the Blue Line. When the project is completed, 500,000 Lagosians will be moving from Marina to Okokomaiko on a daily basis. The third rail, the yellow one, will power the train when it becomes fully operational. The visibly excited governor speaks about how the train service will run.
I'm not only excited, everybody on this train is excited, and this is promise made, promise kept. We're starting with a peak hours, movement, and I'm told we'll have a small lay and we'll go on the peak hour again. I think from Lamata's time schedule, they're starting from 9 o'clock till 12 o'clock, right? And they will, because it's off peak, they'll wait again till 4 o'clock in the evening and they'll run the operations again till 7 or 8 o'clock. So for them to be able to gather traffic.
He speaks on the second phase of the Blue Line and the completion timeline for the Red Line.
The Red Line is going to be completed before the end of this year, by the grace of God. Well, about 95, 96% in all of. So, for the Red Line, we'll have over bridges. So we're going to start commissioning the bridges maybe by the end of this month, so that passengers and vehicles can start moving on those bridges from, Ikeja along to Yaba Bridge to Ebute Metta Bridge to Mushin Bridge and all of them. So we're going to open the bridges for vehicles to start moving on top. so that will begin the signalization that red line is coming up. Right, we're almost completing the retrofitting of the trains, and they have also started recruitment of train operators, of train managers and all of that. Then we will start the unveiling of the various stations themselves. Are you serious?
The journey is less than 30 minutes to and fro, smooth.
In fact, it's everything we've been yearning for, asking for. This will bring serious relief to Lagosians when it comes to commuting from one point to another point. The governor of Lagos State, Jide Sanwo-Olu, has done fantastically well for putting this project together and making it come to fruition.
The 5 stations spanning 13 kilometers is the first phase of the 27 kilometers blue line, expected to be propelled by electricity passing through the tracks. The state government says the advocacy to get the public properly informed about the danger of trespassing must continue. Dari Idu, Channels Television News.
All right, time for Commodities Market update now. Joining me is Bolanle Agbaje, Senior Analyst, Financial Derivatives Company, joining me right here in the studio.
Hi, morning.
Good morning. Great to have you.
Thank you for having me.
Yeah, so the blue line is online now, and definitely quite a historic moment for Lagos State and Nigeria. How are you seeing all of this?
It's a very, very welcomed development. Right. I know it's taken so long, but at least for now we've kicked it off, and at this time where fuel prices, ridiculous, it's a good initiative to alleviate, poverty. And when comparing the prices, I think 750 naira is a fair price for the time reduction in time spent on the road. The traffic issue as well would obviously be easing out because most people have an alternative. I'm sure most people would mention the fact that Nigeria should have gotten this far a while ago. But we're still happy that at least we have this alternative, and we expect that the second phase comes as soon as possible.
And get people out of their cars.
Get people out of their cars, off the road. Basically increasing efficiency, productivity across the whole economy. So I'm very excited and ecstatic that this has been commissioned. I just hope that it's maintained properly. It's an initiative that would last for a very long time. You see in other countries, when their rail transportation network is something that exists for such a very long time, and it's updated, is maintained regularly. So I do hope that as long as it's new now, everybody loves it, but at some point, if it's not maintained properly, you see people, not exactly. And obviously, safety is a very big issue when it comes to rail transportation network, and it's something that has to be.
No one is allowed to cross those tracks.
I'm sure they've been saying it, but Nigerians would, because how many people are probably listening to the news and hearing about this? When you're looking at people in the rural areas, they don't have that. I don't think that knowledge is getting across to them.
There are people around
them to caution. Yes, exactly. So
put signs with
it's still all part of maintenance and making sure that nothing happens to the rail network, nothing happens to the lines, and this, we can enjoy the benefits of this for a very long time.
Fantastic. I can't wait to ride on it
Same.
At this point. But let's look at inflation now. We're expecting numbers for August. We did get a new high in July. So what are we seeing for August?
We expect that inflation numbers should increase to about 25.47%.
25.
Yes, it was 24 in July, but and that's just because nothing has changed. In fact, it's gotten worse in terms of prices. Diesel prices already at about 8.90. And we're seeing oil prices. I don't know if you've noticed, every time you just pass those filling stations, every single day, it seems like it's increasing by 5 naira. So that obviously has played into the market as well, played into the inflation numbers too. And we're not surprised about that because it's directly correlated with crude oil prices, because at the end of the day, we're net importers of refined petroleum.
That's why when I'm tracking the oil market and I see oil prices rise,
you can't even be
tug in my chest,
exactly.
I know the pump will feel it for sure.
Exactly, and we're not really benefiting from the hike in or the increases in oil prices at the moment. With our production is increasing slightly, sometimes it goes back down, but we've still not found our balance in terms of getting our production levels to the nice 1.8 to 2 million barrels per day. So that obviously is conflicting. The refineries are still not, the capacity they're producing is definitely not enough to, meet the domestic supply of Nigerians at the moment. So that's, aspect is why we're
battle
facing
against oil theft at
exactly.
This time.
So those, yes, but I guess the government is still trying to make sure that the oil theft issue is being addressed as soon as possible. I hear that they're still installing cameras in several places, looking for ways that they can make sure this oil theft issue becomes or is put behind Nigerians, and we can move ahead and produce the right quantities. Add that to whatever sources of revenue that we're looking for.
That definitely needs to end, oil theft, at this point. And we had the last meeting. That was in July, but we're expecting another meeting this month. That's talking about the MPC meeting. Obviously, inflation is still going to be on the front burner, currency devaluation and all of that.
Well, because inflation is still rising, it depends on what their focus is. And obviously, from the previous meetings, we've seen that the main focus is addressing, inflation numbers. So there might likely be, another increase in interest rates or maintaining status quo, but definitely not a cut in interest rates at this time. No cuts anytime soon. On the economics front of things, it doesn't make sense to cut at the moment, just because you can't fight those issues that you're trying to address when you cut inflation and cut interest rates at the moment. So with the meetings, is either they're sticking to the hawkish side of things, or actually they will be sticking to the hawkish side of things, but it just depends on whether they're increasing or they're maintaining status quo. But it's been nice to see and watch what happens.
Yeah, we'll definitely look out for that meeting later on in September. But let's look at the oil market now. We're seeing, looks like every major producer is tightening at this point, deliberately trying to raise prices.
Yes, because it's in their best interest. They depend on, the revenues from this income. And when you're looking at the demand side of things, it hasn't been at the beginning of this year in January, there was so much talks about, China's recovery from and opening up from COVID and all of that, expectations of increasing demand. And now we're in September, and this hasn't been increased as much as we expected. I think the Chinese economy, they're trying to be cautious and manage expectations, and also try to boost their economy gradually, as opposed to getting back to those levels immediately, because I'm sure that would also have direct negative impacts on their economy, because it might not stay as long as they expect. So I guess they're trying to be cautious. They have so many policies that they've introduced in place to make sure that some of their manufacturing economies that had been stagnant throughout the past 2 years would are able to revive nicely and be sustainable in the near future.
I'm hoping the major producers at this point have some kind of price ceiling, so the prices don't go up
well, at this point, a price ceiling is not.
They should look at a price ceiling, because countries like Nigeria now, we're feeling.
We are just feeling the brunt for our actions.
Even though we want to.
I don't think they're putting what Nigeria is facing in their meetings at the moment, just because Nigeria is only feeling. Too. Yeah, Nigeria is feeling what we almost saying that we're enduring what we used our hands to make for ourselves, and it's not any country's business what happens. But with other countries, it's Russia, Saudi Arabia. They're looking for ways to boost their income, and oil prices still haven't even gotten to those levels that we used to have them at. So it's currently at
over $100 would be a lot.
Well, it would be nice to get to $100 per barrel for sure, because we will still benefit from that additional income for sure. But at least when we get to that point, I'm sure Saudi would look for ways to now calm down and ease out on making initiatives that would actually increase or reduce supply.
All right, let's look at grains market now. All eyes on that meeting between Erdogan and Putin yesterday. That did not go as planned, and Russia is still out of the Black Sea grain deal at this point.
Yes, I already even mentioned Russia is out of it. I don't think they're getting back into it anytime soon. Russia is at the moment where they're trying. A lot of countries have already, removed them from whatever discussions that they're having at the moment. So Russia now is pro-Russia. they're looking for ways to boost their income. The grain deal is not, going to do anything fantastic for them in terms of the fact that, they're committed to this particular deal, and yet other countries are also blacklisting them at the same time. So they're looking for ways to maintain that power. And I know that they have so many deals, side deals that they've cut with India and China. So those are, kind of deals I think they are trying to, make to benefit their economy and boost their revenue, because I think that had been really impacted because of the war.
And we see wheat prices already reacting to that this morning.
Yes.
Did rise. And definitely at the same time, we're seeing cheap Russian wheat still, keeping prices down.
Yeah.
But somehow the geopolitics traders are finding ways to pop up the price.
So just because everyone is unsure about what, the future of wheat supply would be, some of these producers or buyers of wheat are trying to solidify their profits in terms of that. So at this point, when they feel like, it seems like you're not getting enough supply of wheat, it benefits them to increase prices of wheat. But right now, the prices that wheat would be trading at, I think they're currently at about between $700, $800 dollars per bushel. That's huge comparing to, pre-COVID, where we had it at about $300 dollars per bushel. So wheat prices now, any producer of wheat would definitely try to take advantage of it and, try to be on the receiving end when it comes to profits. All
right, we've seen the Nigerian government set up a Solid Minerals Corporation to attract investment.
Yes.
What are you seeing with that?
It's a good initiative. We've spoken so many times about the fact that Nigeria is buoyant in a lot of natural resources.
Because we see how Russia's, taking advantage of
course, because that's all they have.
Right.
So I guess if it comes to a point where Nigeria can only or solely depend on, other resources apart from oil, I'm sure we'll take it seriously. But I guess it's another initiative. So I think one that we're really, doing well with is limestone. And I guess, that's gold as well. We do have gold, and I don't think we've, tapped into the minerals for gold. And that's because of obviously lack of technology, information, all of that. So this initiative will definitely be beneficial in terms of...
we also have to put a stop to illegal mining.
Yes, we definitely do. We definitely do. And this needs to be channeled into the funds that the government needs to pick up the economy.
All right, what's happening with domestic commodities?
Well, we're seeing mixed reviews. Some commodities like tomatoes, pepper, we're seeing prices reduce in those particular commodities. Then the grains like rice, gari, prices are still increasing. But we're going to be entering the harvest season very soon, and we do expect that, prices ease out a bit. But it doesn't last for long, because by the time you're getting into the Christmas period, you see that pickup in demand. But obviously, we're learning from what happened last year. And last year, the pickup wasn't as much as we had expected. And because things are still quite dull for major individuals within the economy, so we don't expect the demand to, pick up as much as...
Can't believe in 2023, we're already looking forward to Christmas at this point. The Amber months are here.
Yes.
Fantastic. Well, thank you so much, Bolanle Agbaje, Senior Analyst, Financial Derivatives Company. It's great having your perspective.
Thank you for having me. Thank you for having me.
All right, we'll take a break now. When we come back, we'll drill down on Nigeria's banking industry, get a sense of how financial institutions have fared in this tough business environment. That's our next conversation. Stay with us. Welcome back. Well, Augusta & Co. Limited released its banking industry report for 2023, which gives a comprehensive review of Nigeria's banking industry to get a sense of expectations. Now, joining me is Ayokele Olubumi, Head Financial Institutions Ratings, Augusta & Co. Great to have you on the show.
Good morning. Thank you for having me.
Good morning. So before we dive into the report now, see the National Union of Banks, Insurance and Financial Institutions employees. They're supposed to start a strike today, saying that the employees should not go to the banking and withdraw services at this time. How are you seeing all of this?
Okay, from what we've seen so far, compliance seems to be low. Right, but we also notice that a lot of banks are actually on high alert. Right, the environment is so tense, so most of them are dressed down, although are attending to customers. And if the situation deteriorates, we see them as some of them actually shutting down. But something that we need to also note is that with the advent of electronic banking, and most of us actually doing a transaction, consummating a transaction digitally, you notice that even when the banks are physically shut, the impact might not be that significant, right? Because you realize that you can actually consummate all your transactions from the comfort of your home, from your offices, right? Using your phone or using your laptop.
I know that, even when there's no strike action, sometimes you see the apps actually fail. So I don't know, maybe we might expect more failure, with this kind of action now.
But also, don't forget that most of them are actually in their offices. And what I also expect is that most banks will be anticipating an upsurge in the volume of transaction of those channels, right? So a lot of them will have actually even prepared for that particular scenario.
All right, looking at all of this, how do you see, it's going to be a warning strike, definitely, but how do you see this impacting, the banking industry and, customers at this time? Is it going to be really minimal, as you said?
I think it's going to be minimal, not only even the banking industry, even across the economy. Don't forget also that a lot of us have actually mastered the work from home culture. Most organizations also have an hybrid culture. So you can even say that in the banking now, everywhere might look as if you don't have people there. But it doesn't mean people are not actually working on it, right? Most of them from the comfort of their homes, right? They can actually even be transacting and even supporting their customers. So I think the impact is going to be minimal. Even if you check it if you even check it around the economy, right? One of my colleagues was saying that, he himself was not even sure there is a strike going on. You notice that there's even still traffic on the road. So I think the strike won't be that effective. I think the impact is going to be a bit minimal.
All right, we'll keep tracking here to gauge compliance today. But let's go into your report now. It shows that the banking industry loan book, that rose by about 27% in the 2022 financial year. Tell me what drove this and how have banks managed to navigate this growth?
Thank you. A lot of factors contributed to the growth that we saw in the loan book of the banking industry. First, you notice that as the challenges in the FX market increased last year, most companies, particularly the manufacturing company, focused on backward integration, trying to get imports that hitherto were imported out to try to see how they can actually get it within the country. And most banks stepped in and supported them. And that was also supported by the discounted the DCRR window, which allowed banks to avail long-term funding to businesses, right, at a subsidized interest rate. So the DCRR, coupled with the challenges in the FX market, supported backward integration. Also, remember also that last year, most from the fiscal side, there was a lot of support extended to the agriculture sector. And we realized that most banks were also lashing up onto it. Also notice that there are some agricultural firms that actually export some of their products. And as we introduced, the RT200 policy was introduced last year, right? Most banks were looking at ways in which they can even get FX for their own, independent of the CBN. So we also saw an upsurge in the agriculture sector, specifically it grew by 31%, right? And also the oil and gas, right? That talks to the impact of the devaluation. The devaluation bloated the banking industry loan book to an extent, right? So the loans to the oil and gas sector, particularly the upstream segment, right, grew significantly and supported the growth that we saw in the industry's loan book.
All right, let's look at some of the reforms now. What specific reforms implemented by the new administration? We've seen subsidy removal, exchange rate harmonization. Which ones are expected to provide growth opportunities for Nigerian banks?
Okay, let's even first, you're talking about the fiscal side, but let's even first go back a bit into the monetary side. Because what you've seen is that with the change in the CBN that we've actually seen a change in the way the monetary policy actually implemented. I'm talking specifically about the CRR implementation, right? You notice that what we've seen now is the CBN is reverting to the methodological implementation of the CRR. Before we had the discretionary CRR in which the CBN indiscriminately just debit the account of banks, right? So we've seen the CBN double down a bit on this, right? And that will increase liquidity for the banks. It will actually even help the bank to have more funds to actually even play with and even give out as loans. We mentioned removal of subsidy, and that is going to revolutionize the downstream segment of the industry, because with the removal of subsidy, what you've seen that the profitability of the downstream segment has actually improved. And also, we anticipate some mergers in that particular segment, right? Such that you see that we now have a bit more stronger players in that particular space. Not only that, right? The removal of subsidy and even the harmonization of the foreign exchange market has also increased the working capital need in that particular segment, right? You notice the cost of even getting a tanker, right, of PMS has even doubled, right, if not tripled, right? So that has also increased the need in that particular segment, right? Then also generally in the economy, we see that because Nigeria is actually import dependent, and the amortization of the FX, which has resulted to a significant devaluation of the naira, we've seen that it has significantly increased the working capital need of businesses, and that provides lending opportunity for banks. Also, let's not forget the Electricity Act, because that Electricity Act now provide more leeway for those providing captive power, for more players to come into that particular segment. And a lot of banks are looking at that also, right? We've also seen some efforts to reform the solid mineral space, right? Although it's still early days, right? But if done properly, right, to even sanitize that particular segment, it can also provide lending opportunities for the banking industry.
All right, talking about the cash reserve ratio now, do you expect the MPC to reduce this going forward? What are your expectations there?
I think for now, right, what we are saying is that the banks are even still trying to even adjust to the current cash reserve ratio that we have currently. To answer my question specifically, I don't see the MPC increasing it, at least at this their next meeting. Although we can actually have the change going forward, but I don't think they will actually even touch it this time around. I suspect that they might actually want to tickle with the MPR policy and then the asymmetric corridor. But I don't expect them to try and even cut the CRR. Don't forget that recently we had the CRR for the merchant banking space reduced, right? So normally they'll be thinking of ways of reducing it. But the reality in the economy is that it's going to be difficult for you to reduce the CRR and also be fighting inflation.
Yeah, definitely going to be difficult, because I was going to ask you that definitely that will play into the inflation story at this point. But in which sectors are you anticipating new loan disbursements to flow, and what are the reasons for this distribution?
Okay, I think the manufacturing industry will still remain the host of the banks when it gets to lending, right? Because you know that the manufacturing sector is one of the largest sectors in the economy. Despite the challenges, right, there will still be disbursement to that particular sector. And like I mentioned earlier, the devaluation has significantly increased, right, the working capital need of the manufacturing firms, and we expect more disbursements to that particular sector. Also, what we are seeing in the downstream segments, we anticipate more lending in that particular space. Agriculture and businesses with potential to earn FX will also be a place where banks are focusing on, because a lot of banks are looking at ways in which they can actually increase their foreign currency deposits, which they can use to support their customers. So we expect banks to actually be looking at those particular sectors. Also, something that you will notice is that, look, the telecom space, right, remained a growth area for the Nigerian economy in general, and even the banking industry, right? And we see was actually one of the sectors with the largest growth in last year, and we also expect that to continue in the near term. Then the power sector will also be a toast for the banks. However, the banks are looking at not only the disco, but we're looking at all those captive powers. What we've seen in the last 2 years is that most state governments, they've been paying down on their bonds, right? So you realize that leverage ratio has reduced significantly. And with the increase in the amount that they are getting from the federal allocation, you see that they've actually even grown their revenue. And a lot of banks are looking at where they can actually structure some transactions in which they can even disburse more loans to the state government. Because a lot of state governments, have infrastructure issues, a lot of things that they are dealing with that they need some fundings for.
All right. What emerging risks do you see coming for the banking industry in Nigeria, and how do you think banks can respond to swiftly, mitigate these risks?
Yes, with what we are seeing in the economy, the adverse impact of this economy, of these reforms that are ongoing, you will notice that they will accentuate credit risk in the banking industry. And a lot of banks have been stepping up their loan monitoring. Right, a lot of banks, they've activated most of the measures that they have in place to be able to curtail deterioration in the loan book. Then also, cyber risk is also very important. Right, we mentioned earlier that a lot of transactions can be consummated through the digital channels, right? And a lot of banks are actually watching that, because we also know that all these hackers are very active, right, in that particular space. And let's also not forget that there is also a correlation between fraud and even the state of the economy. When there's a decline, when there's a deterioration in the state of the economy, things like fraud, the incidence of fraud actually increase significantly. Then with the immigration wave that we are seeing now, right, the risk of attrition, right, in the staff numbers in most banks has increased significantly. And we've seen that a lot of banks have actually been responding, either by increasing the remuneration, some trying even working on their offering to their staff, some trying to even work on the culture, right? That one will also impact that part of the banking industry. Now, we spoke earlier about inflation. The banking industry is not insulated, and we believe that that will also affect the banking industry. And let's not also forget the devaluation. The devaluation will bloat the loan book, which will have implication on their capital position, but also it will affect the operating expenses of most banks.
Right. Well, definitely a lot to look out for, and hope the banks actually mitigate most of these risks swiftly. Thank you so much, Yokunle Olubunmi, Head Financial Institutions Ratings at Agusta & Co. Thank you.
Thank you for having me.
All right, now let's head to the markets. Now we have Anete, and talking about the banking industry. Definitely, banking stocks.
Yes, good morning, Eddie.
Good morning. Banking stocks in the exchange. We've definitely had a good, great first half of 2023.
Exactly. Even I think as at yesterday, GTCO released their reports. All the banks, particularly the one we call the full gas, First Bank, Union Bank, GT Bank, Access, and Zenith, they all, they're the major contributors to the markets. Impressive market capitalization, and at the same time, bank earnings as of for the third quarter, as well as for the first half of the year, it's been kind of impressive. Stanbic IBTC released theirs last week. Was a blowout earnings for them, and of course they did celebrate that on our reports, right, which we had just last week.
Currency devaluation definitely helped most of that.
Exactly. So it's different tales for different
exactly
folks. But first, let's talk about the unlisted securities market. Take a look at your board there. Almost 1% increase for the unlisted securities market, the younger brother of the Nigerian stock market. When you talk about equities, this is unlisted securities. It was up by 0.99%, like I mentioned, and that comes largely on the back of a 10% increase from Aradel Holdings PLC, as well as Central Securities Clearing System, which had 10% and 1.33% increase on their share price. Moving over to the other side of that market, this is how it turned out for the activity, minus for the volume percentage of volume transaction carried out, as well as the value. Now let's move over to the equities market, which we talked about. 411.55 billion was added to the total value, and of course that big story which you saw on our business news at 10 last night, the all share index crossing the 68,000 points, blowing past that figure at about 68,279.14%. The first time in its trading history. It has never hit that part, but then we will be asking our analysts whether it's going to get to the 70,000 points, because it's just not too far away from the 70,000 points. When you just look at the figure there, just about 1,000 plus points before it gets there. Now, moving over to the other side of that market, that's the sectoral performance, like Ladi mentioned, their banking sector had a field day there, 5.65% increase, which was what largely lifted the market. We saw all those big banks making their strong impact there. Consumer goods was also on the in the green, but we saw mixed picture on the other side of the sectoral performance. Now, let's look at the activity chart. In terms of activity, green colors there, 67.88%, 88.56% 6% and 6.99% for the deals, value, and the volume. Now let's talk to Aroma Kebira, who is the Managing Director and Chief Executive Officer of Global View Capital, to give us more insight into, first of all, the month of August for the equities market, as well as this impressive all-share index performance recorded just on Monday. Thank you for joining us, Aruna.
Good morning. Thank you for having me.
Now, I know that as a trader, you're quite impressed with this market. Did you see this coming at 68,000 points? And can you tell us more about this feat?
Yes, we had the feeling, the inkling that this might actually happen, especially when on August 29, that the market repeated the feat that it last did March 5, 2008, by crossing 66,000 points. And because of the news at the marketplace, we all know that definitely that there's every possibility of the market getting to the level that it is. So to me, I don't think it's a surprise. And I also believe that this might not be the end of this rise.
Okay, so now at 68,000 points, well, if we go back to 2008, you were in the market, I was also in the market when this market, had gotten to that 66,000 initial high, but now at 68,000 and counting, I don't know what the market is currently is there any fear of maybe the bubble bursting? What are the fears for any likely investor at the moment?
For me, I don't think that there are fears because for now we have stiffer regulation and we also have more compliance. I think we all know what happened to the burst of the bubble by 2008, 2009, and look at the result that are emanating from the bank. We understand then that banks don't have a unified year end. Now they do have unified end. And most of these gains that we are seeing from the bank, the one that have been released, audited accounts, which must have passed through the CBN, and there was a go back and forth before they are released, shows that there's serious, strong performance. These are not built on empty space, so they are not hanging. So because of that, I personally do not believe that there's going to be a bubble soon. The only thing that may happen is that the prices can stagnate while the market is waiting for another stimulus, and the stimulus can be either within or without. As far as I'm concerned, I don't have fear whether there's going to be, but like I said, there is regulation is more stiffer. What we see today, regulation both from the NGS, from the CBN, both from SEC, even Action, we are not there between 2008 and 2010. Now that was why what happened then happened. I don't think it will go to happen, and I don't have any fear at all.
Okay, just last week, just one last question before I let you go. Last week, the Minister of Finance, Wale Edun, mentioned that the government would not be borrowing at the moment, but rather will be going into the capital market for funding. So, is this one of the panacea for the market? Is it one of the things revving up the markets as we speak?
Yeah, I do believe, because we have what we have is they call it circular flow of income. You see that the income will move from capital market to money market, money market back to the capital market. The Murphy, that is a Ministry of Finance Incorporated, who is a custodian of government investment assets, met with the regulators in the market, and instead of borrowing, they said they want to prepare all the companies under their purview and come to the market to list. And remember that the best form and painless form of capital formation is the capital market. And the moment that is measured, there is this change of focus from, especially, the government is the biggest spender, the biggest participant in the debt market. So the moment their presence in the debt market will be missed, then there will be a focus on where they are likely going to be, which is the capital market. So I do believe that pronouncement actually, and again, just look at what has just happened. somebody who took position in the Dangote sugar at 27 naira and now 66 naira, that's almost 100%. There is no any other investment in this country that can give you that inflation index return. So it's the capital market. I think that is why that focus is more on the stock market as we speak.
Okay, so thank you so much. We really digested your analysis and we're really quite impressed with that. So thank you so much for your time on our show.
Thank you for having me.
Thank you. So that was Aruna Kebira, Chief Executive Officer at Global View Capital, giving us details about the market. So, Ladi, there's a popular of investments, and I don't know, do you give an investment analysis to anyone?
Well, at this point, I feel like the only investor that's not afraid in this market right now is an investor that bought in the downturn.
Exactly.
The only investor that will be scared right now is if you're buying right now and you're afraid of buying the top because you don't know where the top is. Exactly. Maybe it's close, maybe it's still far away, but you don't know. So I guess that's the dilemma right now.
Well, it's a very, very big dilemma. I think, well, I wouldn't call it a quagmire, but the market is full of risk. You take your risk.
Yeah.
The risk, risk?
Whatever you can take right now.
Definitely.
Thank you so much, Anita, giving us details there in the stock market right here. Let's head on to London now and still looking at the stock market. We see the London Stock Exchange Group there planning to build a blockchain-powered marketplace. Juliana, quite interesting. Looks like traditional markets are learning a lot from blockchain technology.
Good morning, Laddie. You're absolutely right. We're talking about your favorite topic, which is blockchain. And yes, after about a year of consultations between the London Stock Exchange Group and those who are familiar with blockchain, according to one of the bosses there, you know, they have reached an inflection point and they do believe that perhaps they could take some sort of blockchain style trading platform live. This is still very much in the future. LSEG will still have to go through significant negotiation and dialogue with the UK Treasury and the Chancellor here, but they clearly have seen that against the backdrop of other firms, other countries adopting blockchain-style trading platforms, that this would be great for traditional assets. Now, not everybody, of course, is abreast with what exactly blockchain is. It's closely associated, of course, with digital currencies and cryptocurrencies such as Bitcoin. And of course, those who trade in those currencies are able to use blockchain platforms to talk anonymously. Now, I think when the LSEG gave this statement to the Financial Times yesterday, because that's when the story broke, they were pretty clear about separating themselves from cryptocurrency. So the blockchain trading platform, which is likely to be a separate legal entity away from LSEG, will have nothing to do with cryptocurrencies at the moment. But they do like the seamless nature of it. They do like the fact that it's so much easier. And I think now the LSEG basically saying they are going to be using a blockchain to trade traditional assets, but they are going to make sure that it is regulated. So even though it will seem seamless to the users, there will be somebody in the background making sure that things are running well, which is the issue the British government has with Bitcoin and cryptocurrencies. They just don't believe that consumers are protected because of the anonymity. But I think this is a great step forward for digital coins and blockchain, and perhaps this will usher in greater relations with that system going forward. Yeah,
talking about greater relations there, and they did confirm that this is not for cryptocurrency, so fine, we'll keep watching though. Now, we have data out this morning in the UK, say retail sales did bounce back in August. What drove this?
Yeah, you're absolutely right. The British Retail Consortium have released data from August showing that retail sales year on year are up about 4.1%. Apparently it's lipstick. Lipstick topped the billing when it came to consumer habits, but also food. Lots of people out and about. It's summer, of course. The children are at home. Anybody with children knows you spend much more on food when they're not in school. But I do have a bit of breaking news for you, actually, and this does impact the retail sector. And this is about Wilko. We've been discussing this for a couple of weeks now. About 4 weeks ago, this store stalwart on the UK high street. It's been going for over 100 years. They announced that they were slipping into administration. They acquired PwC to oversee the administration purpose. They did have a buyer last week that fell through, but this morning, B&M, which is a similar style, should we call it cheap, a store selling anything from pick and mix, which are sweets, to curtains and tea bags. They have actually agreed to buy 51 Wilko stores today at a value of about £13 million. This is still a developing story, but really significant because, of course, we know there were thousands of staff that were due to be made redundant. Now, of course, this isn't the entire franchise. There are about 400 Wilko stores, but the fact that B&M have just confirmed literally less than 15 minutes ago that they're buying 51 Wilko stores is a really great story, because we know, Laddie, we've been discussing this extensively. The British High Street has been absolutely battered in recent years, particularly because of the pandemic, but also because of online stores. Places like Amazon, they can get goods to people much cheaper, quicker, and that's what people want. So the British High Street is dying, but alas, Wilko, that's been going for about 100 years, has just been given a lifeline by B&M. 51 stores will be saved at a value of £13 million.
Yeah, and that sounds good for employment, but it's a developing story. We'll get more updates later on. Thank you so much, Juliana, for the update and the breaking news.
Thank you.
All right, now let's head on to other markets. Now let's take a look at what's happening. Let's see the color in the crypto market. The color is red this morning. Yeah. That's red. That's what we're seeing. Profit taking right there. Bitcoin holding at 25K level. Dominance, that's Bitcoin dominance, 47%. So it's mostly red. That's the color we're seeing in crypto market. Now let's look at the sentiments there. 40 points fear. For the longest time, early August, it was neutral and greed, but now we're back in fear. 40 points, showing that traders are more afraid at this point. Let's look at the top cryptocurrencies now, with prices at 8 a.m. this morning, with Bitcoin, a big drop there, 1.10%. Ethereum, 0.87%, marginal drop, but Cardano is the only one positive territory, but marginal, though, 0.04. 25 cents as price was seen, and XRP holding that 50 cent range, almost looking like a stable coin at this level, holding that 50 cent range. Let's look at how popular cryptocurrency is now with a recent study. Let's talk to Rume Ofi to bring us details there. Great to have you, Rume. Good morning.
Good morning, Laddie. Good morning.
Yes.
Good morning, Laddie.
Exactly. So, Rume, we're getting more studies at this point. One from blockchain and Web3 software company Consensus. They found that Nigeria is leading in cryptocurrency awareness across all continents, with 99% haven't heard of the asset class and 91% agreeing to invest. How are you seeing this data?
I'm so happy, because it shows that a couple of things that we are doing on this platform and some other platforms are working. Consensus is a very big platform, and Consensus is finding the real thing here in Nigeria, in Africa, So I usually tell people that Africa has a lot, and Nigeria is going to lead as frontier in that part. This research was done around that it came up with people online for 15,158 persons that actually took part in that, and Nigeria came out top aside 15 countries where we have the US there, the UK, France, South Korea, Argentina, Mexico, the Philippines, and Japan, right there. Nigeria is coming out tops. This is a very good development, right? Suggesting that four persons, in every 5 persons, 4 of them are actually aware of cryptocurrencies, and the research said that a high level of them are about to invest. But there's something I really want to say concerning this research that is so important. The research also found out that people are not yet involved in understanding the technology in Web3. So Web3 is a decentralized internet that is to come very soon, that is in the future, because the future is here and a lot of persons need to position themselves. I'm very, very happy this is coming out, but again, we need to have a right approach to guide all of these persons having interest in it, of which we are doing here on this platform.
Yeah, I guess having interest and also learning about the risk is definitely important at this time. But let's look at another news now. Definitely Binance, that's the exchange platform has been on news lately with regulatory pressure from the SEC and other regulators. But now we're seeing another top executive leaving the company at this time. Is this a sign of things to come?
Binance has been through a lot of turmoil. The truth is, like if you are the tops, a lot of things comes out when you are the top. Binance is the biggest cryptocurrency exchange platform. So everything is being thrown at them, from regulation in the US, regulation in different parts of the world, even in our country, Nigeria, and everything. So it is not easy. Considering also the economic turmoil is going on in the world now, it is not easy for them to manage all of those interests. So I think with all of these put together, it's just the best way for top executives to, some of them, taking their leave. I'm really not surprised, although conspiracy theorists, we say that Binance has issues that it's going to probably affect the exchange platform. But there's a couple of times I personally engaged CZ, and he I think quoted him, he said, Binance is an ecosystem. The exchange is just one part of it. People living for now, if you ask me, it's not something that we should bother ourselves in. You also need to understand that in the US, there's a huge economic issue. The cost of borrowing money is actually high. People are always also going to prioritize, but we don't know. There's also a sealed evidence that came up some days ago in court. Yeah, and that also is a challenge facing Binance. So them leaving probably to cut costs for now, because we're already learning how to breathe underwater, and it's going to take a few while we smile again.
Right. I guess safe to say it's lonely at the top, and if you're Binance, a lot of regulation at the top at this point. Thank you so much.
Exactly.
Rumeofi. Thank you.
Thank you very much, Ladi. Thank you.
All right, now, so that's how the market is looking. We see XLM still rising there, 3.79%. Matic also on the top, Guinness counter 2.27%. So I was still seeing a mixed picture right here in the crypto market. Top losers there, ASTR topping that count at 5 cents, down 5.37%. And KuCoin shares also down by 3.41%. So that's how the market is looking. Still fear right now in the crypto space. And that's the show today. Thank you so much for watching. Don't forget to join us at 1:30 for Business Incorporated with more updates on developments in the world of business. And you can watch this again on our YouTube channel. Flip over to YouTube, search for Channels Television. You can watch all our productions. Thank you for watching. I'm Ladi Williams. Bye-bye.